Vitale American Retirement Advisors with the Graded Investments Weekly Market Update for the week ending April 22nd, 2024. Let's get into the stocks in review. They declined last week, and the S&P is now down over 5% since the beginning of April. Year-to-date, large cap U.S. The S&P 500 and international developed markets remain positive, while the small cap, which is the Russell 2000, and the emerging markets have fallen into negative territory. Now, you do remember last year was a really good year. The year before was really bad. So this is kind of like going back and forth. Interest rates continue to climb in 2024, creating a headwind for bonds. The U.S. bond aggregate index is now down over 3% year to date. Bonds, is supposed to be the safe haven. But remember, when interest rates go up, bond values go down. Economic release upcoming this week has seen the first estimate of Q1 GDP, followed by personal consumption expenditure, which is the PCE numbers. And GDP will give our first indication of U.S. economic growth, while the PCE provides the Fed with greater clarity on the current state of consumer prices. We're still seeing sticky inflation, and that's what's really happening. We're not going to see the rate cuts they want. Let's talk about market outlook. Markets have pulled back after a very strong run since October 2023. Pullbacks are a normal part of market trends, and this current one is not indicative of any real significant change to trends in either earnings or economic data. Now, this and next week are big for earnings results and commentary. This week alone, the S&P 500 has 158 companies reporting results. Also, thus far, of the reported companies have been from the financial sectors, but the next 2 weeks will include a broader assortment of companies, as well as some tech companies, and a driving significant portion of overall estimate earnings growth for the quarter. We've seen some of that today with tech numbers coming out, which were better than expected, but the market's still down. So it's going to go up and down. Up and down you're going to see, and we can't always continually go up. Recent activity, the absolute yield portfolio was rebalanced last week. During that process, the portfolio management team reduced holdings in high yield bonds and preferred stock and added position in REITs and CLOs. So just trying to make sure that one has been doing very good, 6 to 8% yield over the last, at least, I'm going to say 8 to 10 years. It's been doing wonderful. Stocks in the news. Procter & Gamble, which is owned in the Core Select and G50 portfolio, reported EPS numbers that beat expectations, but were slightly below expectations on revenue. The company reported 3% organic growth, driven by price increases in the beauty and grooming subsegments. How about United Healthcare? That one's been doing very well over the years. Owned in our Core Select, G50, and Contrarian Choice portfolios, reported earnings that beat expectations, and guidance was better than feared. The company reported an update by the cyber attack at Change Healthcare that reflected significant costs to support care providers while services were being restored. So that concludes this week's market commentary. Thank you so much for being part of the ARA family. If you want to give us a call and need any questions, 855-756-5700. Visit us at aradvisorsinc.com. We've been having some really nice weather. Other than today, it's really cold out, but we've got some nice weather coming. So it's nice to see spring is on the horizon, and looking forward to some nice weather. If anything changes, let us know. We're going to be going through some changes as well. We've got a lot of good positive things happening with the company we're going to keep you up to date on. So be ready for some announcements. It's really exciting what's going on right now. I do think we are seeing the market as a gradient, and our beliefs is that the market's going to hold pretty good this year, based on historic performance and everything else. But it doesn't mean that we're going to go crazy. We're still going to maintain proper allocations and making sure we've got safe money and growth money. So that's what we're going to be here for, making sure you're in the right position. So take care. God bless you. We'll see you again next week.